Trade has been in the headlines this past year, from the trade war with China to the holdup with the USMCA to a trade agreement in principle with Japan. And it all boils down to one thing: trade policy will usually be a painstaking and time-consuming endeavor. And while the numbers say the grueling work that goes into trade is worth the effort, the politics of trade bear out a barrage of challenges in going from a trade proposal to a trade deal. This week, Bill Dodd sat down with Extension Policy Specialist Brad Lubben to discuss the intricacies in the politics of trade. Bill, what have you got for us today?
Thanks, Troy. You know, whoever said good things come to those who wait was probably a trade expert of some sort. It's been an interesting year in trade, to say the least, and it's been a very uncertain time for producers, as we've seen both the economics and politics of trade hinder progress all too frequently. Now, through this process, it's easy to see why trade is so important and such a politically sensitive topic for many folks in the ag industry. Since the turn of the century, U.S. ag exports have grown from $51 billion to $140 billion in recent years, before a sharp drop-off the past 2 years due to falling prices and escalating trade conflicts. Estimated ag exports from Nebraska have followed a similar trend from about $2.3 billion in the year 2000 to over $7 billion in recent years, before falling back to about $6.3 billion in 2017 and lower trade projections for 2018 and 2019. Much of this can be attributed to trade woes that have diminished exports, as well as farm income prospects from commodity-intensive production states such as Nebraska.
We know the statistics that say Nebraska agriculture is about 1 of every 4 jobs, or 1 in every $4 of output in the state, and much of that Nebraska ag income comes from trade prospects. Our commodity-driven production system is sending commodities across the globe, and so increasingly trade has been an important driver of Nebraska farm prospects and in turn the Nebraska general economy. In that environment, with an increased reliance on and importance of trade, we see the increased uncertainty of continuing trade conflicts at present, and it has led to quite a bit of uncertainty in the markets, which in turn have impacted farm income prospects for the state.
We've witnessed negotiations in the World Trade Organization stall out time and time again, causing a slight rift in world trade politics, making it harder to maintain a global trade policy. However, regional trade tends to move along at a much smoother pace.
Negotiating agreements with the countries you already trade with seems to be easier than trying to negotiate an agreement that all countries in the world can sign off on. So we've seen increased growth in regional trade agreements, which do offer prospects and some continued opportunities for trade for the United States. But then we've seen the conflicts now of the last couple years. There was trade negotiations on what was called the Trans-Pacific Partnership, the TPP agreement, that really would have set a trade framework and something of a strategic relations framework in the Pacific Rim region. But when President Trump was elected to the office, that was one of the first acts of the new administration, was to withdraw from that agreement. Recognize that we're now hoping for a finalization of an agreement with Japan, an announced agreement, but terms and details yet to be worked out, that gets us much of, but maybe not all of, what we would have had with Japan had we signed the TPP agreement a couple years ago.
While things are moving slowly but surely with trade in the Pacific Rim region, we don't have to look back too far in the past to see how some disputes and problems have played out with other trade partners in the European Union, for example. It was only in 2003 that the U.S. lost global beef markets, seemingly overnight, due to a case of bovine spongiform encephalopathy, and had to work for the better part of a decade on scientific and political negotiations.
With the finding of BSE was announced in the United States back in 2003. Beef markets effectively disappeared, beef export markets effectively disappeared overnight because the U.S. was no longer a BSE-free country. Well, as we investigated and determined the source of the cow and determined the extent of the infection and effectively controlled it, we regained our status as a reliable supplier of beef. But we didn't regain those markets as quickly. The fact that markets were taken away overnight, it had to become, and it did become, a very long-running effort to try and regain market access in different countries at different times as they ultimately either A, relaxed their tight restrictions, or B, recognized the international designation of the U.S. as a reliable supplier again of beef. And And only now do we see some of the growth back into those markets that were previously really lost overnight to a case of BSE.
Earlier this year, an even older beef with the European Union dating back to the 1980s finally found some common ground. The celebrated agreement with the EU to increase the share of access for U.S. exports of non-hormone-fed beef was a welcome development in the decades-long dispute. After a victory with the World Trade Organization in 1996, the U.S. still could not convince the EU to drop their ban on added hormones in livestock production and imports. While this current deal isn't necessarily a slam dunk for beef producers across the U.S., the significance is still quite tangible.
It's an important component of growth, even if it is for non-hormone fed beef, which is not the predominant share of the production sector, but at least it is an opportunity for growth and an opportunity for trade. So increasingly we see more effort and more opportunity for trade, and some of this comes as a result of sort of generally improving and liberalizing trade relations, and much of it comes as a result of very specific negotiations, one country to another, over the specific rules and ramifications for trade. But it all takes a continued and concerted effort at building and improving and growing trade prospects over time.
While it's fairly plain to see the benefits of trade, it's also abundantly clear that trade negotiations and disputes can be a time-consuming venture to resolve. Now, the moral of the story here is good things may come to those who wait, and as we anxiously await the outcome of negotiations with one of our most lucrative trading partners in China, time will ultimately tell if our patience has been worth our while. And Troy, that's what I've got my eye on this week. I'll send it back to you.